So my goal today is to provide you with a concrete framework. So not simply an idea or a methodology, but an actual how-to on how to make sure you are aggressively protecting and growing your business with your highest quality clients. And the important words there really are highest quality clients, because let's face it, in the ideal world, it's sort of nice to aspire to be the attorney who is going to be all things to all clients, but it's not really a realistic option. There aren't enough hours in the day to develop these deep relationships with every client that you encounter. So we need a way to manage clients better from a time and from a profit perspective. And hopefully these are two items that you want more of in your life. So to do this, we are going to walk through building what I'm going to call a client development plan. And what that is it is simply a tool that is going to help you zero in on the clients that it makes the most sense to spend that energy needed to develop a long-term deep relationship. It's also going to help you create a strategy for building your book of business with those clients. Now, the first step of doing this, and honestly it's of course the most important step that we have, is to understand which clients you are going to invest the time and energy in. Nearly every strategy that we have that develops more work for attorneys starts with and requires an in-depth understanding of a client's business. And it's no undertaking to develop the level and the depth of understanding that we've been talking about. So we need a way that we can look at and rank our clients. This way we're not wasting our valuable time and energy chasing the wrong clients and chasing the wrong opportunities. Frequently when I work with attorneys and I ask them to identify their most strategic client relationships, I usually get one of two answers. The first answer that I receive is attorneys, will say, well, I'm going to chase the big fish. So my most strategic client relationships are those top 10 clients in terms of the company's annual revenue. The other most common aspect that I hear attorneys say is they're going to have their most strategic clients be the clients that currently provide them with the most billable hours, and they're going to consider those their most important accounts. And I want to make a pretty important point here, because this is where client development and sales differs. What we're looking to do is to not chase sales constantly. We want to be able to maximize the relationships that we already have. We're probably going to target one or two additional marquee clients, but really focus on the relationships we already have, maximize them as best we can. This way we're making the best use of our time and our effort. And to do this, we need to look past the bottom line, so past just our billable hours and past the client's revenue. In fact, I don't know how many of you read business and management books in your spare time, and I'm in no way suggesting that this is something that I actually do. In fact, I'm exceptional at starting these types of books and never quite finishing them. The bookshelf full of them. Anyway, one that I did read all the way through was called The Loyalty Effect, and it ties into a lot of what we're talking about, so I do recommend reading it if you get a chance. But at one point, the authors have spoken with the VP of Lexus. And he makes a really interesting statement, because what he says is, the more you focus on the bottom line, the harder it is to hit. And when he was saying this, he was specifically talking about Toyota and Toyota's success, because Toyota, their approach to customer development is about being fanatically focused on elements that drive customer loyalty. So their focus was less about acquiring new clients and more about keeping the ones they had, keeping them in their buy cycle, and selling additional services to them. And if you read through any of the stats that I had on that earlier slide, you would have seen it's 5 times more expensive to develop new business. So loyalty and recurring business is critical. So again, we want to find a way that we look at, rank our clients to identify which of those clients we want to keep and grow our best relationships with. So to do this, I'm going to provide you with a number of different factors that law firms, and in fact all businesses, commonly use to analyze their client relationships. And you're going to see I've broken these out into sort of umbrella categories. So, of course, first we are going to start with the monetary criteria, because while we don't want it to be our only focus, it is definitely a critically important element of looking at our relationships. We also have what I call our continuity metrics. And what these are really about is about looking at the type of work that is available to you and whether or not that work is recurring. Additionally, we want to consider how well the client organization and their work fits in with overriding strategic direction, and more particularly your own goals and the goals of your practice area. Chasing clients that ultimately aren't going to drive the image or the fit that we are going to be portraying in the market, well, that can actually have some pretty severe consequences on a number of different factors, most notably, recruiting new, more attractive clients and also lateral attorneys. So always checking a client's cultural fit and strategic fit against the firms is critically important. And then finally, we have what I consider the do I like working with this client measures, because I really urge you to not take for granted those clients who are willing to pay us and where there are very few headaches involved. I personally love those types of clients. Now, before we move on, let me offer a few guidance tips based on these metrics, particularly what I've seen work and what I've ultimately seen be a little disastrous, in fact, for some law firms. First, when we look at these criteria and we're going to use them to assess our relationships, limit the list of deciding criteria that you are going to use. I've given you a number, in fact, far too many elements to consider on this slide. The best client development plans are based off of 3 to 5 total selection criteria. And all of the criteria chosen, as I've sort of mentioned before, should be tied directly into the firm's or your department's strategic plan. So for example, if at the firm-wide retreat there was a big push on profitability, a lot of law firms are talking about profitability these days. If that is a driving strategic direction for the firm, you might want to make the profit potential one of your leading financial metrics by which to measure your clients by. When you closely tie strategy and the selection criteria, what that does for you personally is you ensure that your efforts with a client are going to be spent on those clients and opportunities that, well, frankly, they're going to get you recognition and hopefully financial reward by firm management because you're helping the firm meet their goals as well. So we want to keep the criteria tight. We want to have them complement the firm's strategy. Otherwise, what happens is the financial returns that you can gain as a result of doing this particular effort, and I'm talking about financial returns for the firm and for you personally, they're not going to be as significant as they could be.
With that, I do want to thank everyone again today for joining me. I do welcome you to reach out to me directly, and my number and my email are on the screen. Feel free to reach out to me if you have specific questions.